this morning's Economic 360, generating income through investments. It's tough to find good and safe places to generate income from investments. This can create a very difficult situation on retirees and others living on fixed incomes. Are there alternatives to bonds and CDs out there that make some sense and generate enough income to support an individual's lifestyle? For perspective on this, we turn to our U.S. Bank investment analyst Jim Russell and Jeff Crumpelman, a senior portfolio manager for U.S. Bank. Jim and Jeff?
Thank you, Brian, and good morning, everybody. Jeff, you do wonderful work with our private clients at U.S. Bank. Thank you for joining us this morning.
Thanks for having me.
You have focused professionally on this area of the marketplace, and I'm talking about dividend-paying stocks specifically for a good portion of your career. I'd like to get your perspective on a couple of questions. Number one, how do dividend-paying stocks fit into a longer-term investor's investment profile? And secondly, can you maybe distinguish between a higher-yielding dividend-paying stock and one that exhibits dividend growth characteristics for us?
Absolutely, Jim. I'd be happy to do that, and you're right. I have studied this universe for quite some time.
Right.
So I think that dividend-paying stocks just have tremendous appeal. And to answer your question, I think you can go straight to the bottom line results. And, really just the proof is in the pudding, as they say in this case.
Right.
The historical data and the research clearly demonstrates that these stocks outperform, and they do so with less risk than the market.
Do you have any numbers for us?
I think we have a graphic, in fact, that we'll put up, and it does show that these dividend-paying stocks have generated an 8.6% annual rate of return going back to 1972, which is compares very favorably to the S&P 500 with a lesser 7% annual rate of return, and non-dividend-paying stocks that have generated a 1% or so annual rate of return. And if you look at the volatility, the risk metric, volatility of returns, that number for dividend-paying stocks is well below that of these other categories.
So greater returns, lesser risk, more appeal.
That's right.
Do I have that right?
I think you do.
Okay.
Tastes great, less filling.
Yeah.
So,
there you go.
And I think it's important to distinguish, as you suggested, between high yield and dividend growth.
Right.
And so the higher yielding stocks, interestingly, are really not the major contributors to those attractive metrics that I just mentioned. And specifically, the highest yielding stocks, in fact, may be housed in slow growth, more mature industries that, in fact, have high or maybe excessive payouts that limit future price appreciation and income growth. So you need to be very selective and use that judiciously.
In the marketplace this year, Jeff, there has been a lot of buzz about dividends. Questions about the economy, questions about growth. The sure thing is the dividend. So are these stocks still appealing from a valuation or current participation standpoint, or are they a little bit expensive?
No, I think that they're very timely, and their moment now is as good as ever. And not only for the long term to these dividend growth stocks that are in attractive industries with robust earnings profiles, lower dividend payouts that are being increased. That really is what generates that income growth. And today, I think the two things that really make them appealing, they've got that Jerry Maguire, show me the money kind of appeal when cash and bonds are, so low in terms of cash yield.
Now, can an investor build a diversified portfolio from this perspective using dividend growth stocks or higher dividend paying stocks, or are we talking about really a handful of stocks that really only have that appeal from a sector standpoint?
Yeah, I think we need to debunk that myth that this forces you into a boring, concentrated portfolio in just a few sectors. And we also have a graphic that will show that there's fertile dividend growth opportunities across all spectrums and sectors. And I would highlight in this graph that we think now technology, believe it or not, healthcare and energy are particularly appealing. And within technology, as an example, you have a name like Intel that throws off a 3% dividend yield, has an earnings growth rate of 13 or 14%, and is priced at 9 times earnings.
No, that's great stuff. Jeff, thank you very much for your perspective, for your expertise. Great stuff this morning. Brian, back to you.